Sandip Sabharwal as well as Sandip Agarwal are both with us to take this conversation forward. Sandip Sabharwal, I'm going to come to you. I'm sure the street is going to watch out for what exactly is going to be the strategy or really, the continuity with this change of hand. What do you think the street would like to hear the most?
So I think the management has spoken, and in my view, although because it's a sudden development, there could be some negative reaction in the very short term. But given the strong bench strength that a company like TCS has, and even the transition from Chandra to Gopinath, the way it happened quite smoothly, and the company remained on the same kind of growth path. Specifically, this issue should not create any significant downside to the stock in my view.
Okay, and do you believe, Sandeep Sabharwal, going to come to you again? Do you believe that that it's only going to perhaps be some sort of a knee-jerk reaction right now in the stock price? As you said, it is only going to be for the short term, and that by and large, when it comes to any sort of a dip in the stock, do you believe that would be a buying opportunity for a bellwether?
No, that's a different question because that brings about the view on the stock and the sector. My view on the sector overall is not very positive given the fact that I see significant uncertainties next year on the demand front. So overall, I am very underweight on technology stocks, and to that extent, I am not looking to buy right now. However, if a stock like a TCS or Infosys, or for whatever reasons, corrects 10 odd percent or from the current levels, then I could be looking to buy.
Sure. Sandeep Agarwal, you think that's going to happen considering the fragile sentiment right now with the IT space? And more importantly, we heard from Rajesh Gopinathan saying that the worst is behind us. They were off from COVID, war, everything, and he didn't think there was a better time to do this. Uh, while the worst may be behind, the best may yet to be, yet to come. But should investors look at this current opportunity of underperformance within the entire IT sector and look to buy TCS now if the stock were to fall?
No, so I firmly believe that this stock won't fall much. Maybe 1-2% volatility. I wouldn't rule out that can happen any day on any stock. But beyond that, I don't see a volatility related to this news. As I said, that while not diluting the impact of Rajesh, I would say that the deep bench strength for leadership which TCS has built, and as I would reiterate that only four CEOs have been changed in last so many years before yesterday. So it reflects upon how well the team is and how much stability is in the organization. I won't see this as a reason for the stock to move much. Having said so, I would say that if there are no big problems from the US banking system and if there is a stability there, I would say that IT stocks have corrected more than required already. And now with attrition stabilizing in a big way, I would say that going forward the earnings would surprise or would surpass revenues in a big way. So we may see mediocre revenue growth, but much higher PAT growth, because if you see all the last few quarters, because of high attrition, the margins have been under immense pressure, which should now ease off. So that is the way I would put. So I would say that this is a great opportunity to buy.
Agarwal, good to have you on the show. We'll let you go on that note. But Sandeep, back to you. The overall construct of the market. While today, of course, we may be looking at a bounce kicking in, looking at the global setup. But it seems like the market is getting into that zone where every uptick as well is getting sold into, as was the case yesterday or for that matter, day before as well. What are you making of the market fragility right now, Sandeep?
I don't think we should be too much bothered about it. I think such fragility gives opportunities for long-term investors to buy stocks cheap, and I think such opportunity is presenting itself, especially in uh, especially in the short term in large Indian banks, and then going forward in many other sectors and in mid caps, small caps, etc. So I think India's macro construct is one of the best in the last many years, and to be negative right now doesn't make sense. So I would think that upside potential to downside risk ratio is quite well placed for investors.
So, Sandeep, let's get a list of where is it that one should shop, the long term investors.
So I think starting off because large cap indices have actually corrected more than the mid cap indices. So I would think that to start off with the larger banks like Axis, ICICI, or SBI, I think that makes sense. I'm positive on capital goods, but then there the correction has not been there. In fact, those stocks have and infra stocks, so those have held up, and they could actually outperform. So there one could consider like L&T obviously is at the top of the list, and then auto stocks have given up decent gains, the four wheelers in because of the overall market correction, some concerns on monsoon, etc. So there also valuations are reasonable. Stocks like Maruti, Tata Motors, Mahindra and Mahindra. So I think they should be the picks right now. Export oriented sectors, I am still a bit wary. So we'll look at that sometime down the line.
We've
Sure.
also got Shivangi Sarda who's joining in on the technicals. Shivangi, morning. Let's get in your take first up as to what the outlook is when it comes to TCS basis the chart patterns.
Yes, good morning. Thank you for having me on the show. When the overall market has been a little dampened, and so is this entire sector. So, IT pack is one such, a pack which has seen a lot of weakness from the last 4 weeks itself. TCS is also a heavyweight which has given up a lot of its gains, and it used to have a firm support near 33, 20 zones, which it has broken and now trading much lower. So I believe there will be some sort of more weakness over here before the stock could again, bounce back for a good up move. So we could wait and watch for this stock to touch around 3060 levels, and then resistance near 3250 levels.
Okay, that's the view coming in on TCS. Meantime, Kunal, let's get in your take then as to how you're reading into some of the mid-cap IT names as well on the charts. Is there anything that's standing out?
So I think Redington is one stock which looks attractive. The stock has been holding on to its 200 DMA for major part of the last 3-4 months, especially when at a point when the mid-cap IT stocks rallied and then they got into a corrective phase. Most of the other IT names like Coforge, L&T Infotech, Mindtree, etc., these stocks have come back to their previous, multi-month lows. I think September or August lows for themselves. So that's an indication of weakness. There are very few names which have actually held on to their 200 DMAs. So Redington is one stock trading at 160 approximately. I would expect that whenever this, the mood in the mid-cap IT stock stabilizes, I would believe that this could be one of the first stocks which can actually come back to its previous life highs of 190, 200.
Pre-open session, the gains are gone. And again, when global markets are good, we don't react. When global markets are bad, we overreact. That's sign of weakness, guys. That's sign of weakness. I mean, you should have reacted on the positive. No, it's up now. Okay, let the rate stabilize. I will not comment too much on it. Sandeep, how much of importance would you give to the fall in oil for us? Today, nobody is talking about it. Everybody is now suddenly expert on what Fed would do, US job data. We are over analyzing everything in America, and we are not analyzing our macros. So it's like we are global macro experts and ignoring the local macros now.
Yeah, in fact, I was very surprised that there used to be a set of people every time crude oil will fall, they'll come and make huge bullish statements on how it benefits India. But this time, the statements have been totally missing. Actually, it's a very significant macro positive. So, and need to also understand crude, a lot of other commodities also fall, and that also benefits inflation. So overall, I think it's a
That's why we've got you, Sandeep. That since nobody was talking about the underlying bullishness for Indian economy because of fall in crude, I thought we might as well prompt you to speak on that.
yeah. So I said it.
What happens to IT now, Sandeep? I'm asking this why because the sense what we've got at least from large IT companies is that okay, there is a problem, but the latest round of problems in terms of the US banking sector crisis or European banking crisis is not having impact on the business. So you do think this is one of the moments where if you bought into the fall in Indian IT, you would be rewarded 3-6 months from now?
I would still think that many of the analysts still remain too optimistic about there being no impact of all these developments. It's highly improbable. I think their decision making does get slow in such kind of environment. Projects do get deferred, and that will have an impact on growth for next year. Now, if there is a correction, will that provide an opportunity? Yes, it will, because these are huge cash generating companies paying out huge dividends, doing buybacks, etc. But for export oriented industry, especially technology, where there is huge over ownership among investors, I would still like to wait it out.
Now, yesterday the stock of Varun Beverages fell, and there's this whole fear that could there be a cola war. Campa Cola by Reliance could have impact in terms of the underlying pricing of the cola being sold in India. Only company which gets affected is Varun Beverages because of their relationship with Pepsi. The stock yesterday fell. Sandeep, is it a good time to buy into Varun Beverages? I mean, it's been an outperforming stock. We don't know whether the cola war is real or not, but ultimately a company like Varun Beverages will continue to grow as there is hot summer and more beverage demand.
Yeah, so I think disruptor entry it does have an influence on stock prices in the near term, but I would think that it will be tough for uh, Campa Cola to come back and gain a very significant market share. So to that extent, actual impact might be lower, sentimental impact might be higher. So, but in the near term, given the valuations of Varun, we could still see some correction or a phase of consolidation. So it's not that people need to jump in today.
Defense stocks will also be in the spotlight today. And Sandeep, wanted your quick take on that. The Defense Ministry has approved a proposal to acquire weapon systems worth about 70,000 odd crore rupees, and major beneficiaries are going to be HAL as well as BEL. Your views?
Yeah, so I think that story continues. So after 2,70,000 odd crores announced earlier, 70,000 crores more. I think the story for these companies continues to improve, and on dips or corrective moves, these stocks obviously are good to buy. So BEL has corrected decently from the top. So on a purely a valuation paradigm, that looks better placed right now. Although HAL story is actually stronger.
Thanks very much, Sandeep, for joining in and sharing with us your outlook on the markets.